Hi fellow traders, I'm making this video to explain my buy trade setup on USD CHF. If you look at this trend line, this is the downtrend trend line I have drawn here, and market has been trading under this downtrend line between December 6 and December 20. And here if you look at this candle, this candle actually made a breakout above this downtrend line, and we got a buy trade setup here, but I didn't enter right at the breakout. I waited for the retracement. In most of the cases, you'll see that market retraces back to the breaking point or back to the trend line after a breakout. So here market again came back to the trend line. After this retracement back to the trend line, there was a bullish bounce here. When I entered my buy position, I entered already at 0.9810. Market now at around the same area, 98107. If you can enter right now, or you can place your buy limit at 0.9810. So, and if we look at the 30-minute time frame, we will see that market created a bullish engulfing candle pattern on this 30-minute time frame. For example, look at this candle. This was a huge reaction. There was a reaction in this candle as well, but this was a smaller bullish hammer kind of pattern. But I didn't consider this candle for taking buy position because the size of this candle is pretty smaller compared to the size of other bearish candles. So I took this candle into my account. I entered my buy position. Now let's go back to day time frame, where I'll explain my entry. My target, not entry, sorry. So let me remove unnecessary things. All right, so okay, if we look at this 38.2% Fibonacci, 38.2% Fibonacci is coinciding with this previous swing low, and 50% is coinciding with previous trend line. So next destination of USD CHF is either 38.2, which is coinciding with the previous swing low. So this is making a confluence resistance zone. This low, this swing low, and this 38.2, and the next will be 50%, which is coinciding with the previous trend line. All right. So I'm actually exiting my position at 38.2%. This is where my target is, and my stop loss is below this swing low, the low of this candle. And if we calculate our risk versus reward, I'm getting better reward compared to the risk. So from my entry point 98.10 to this area, this is around 42.0 pips. 42. So this is what I'm risking on this trade, 42 pips. And if I calculate my take profit, then my reward is better than this. So let's calculate from 98.10 to this 38.2. So I have 56.7 pips on the reward side. So my risks to reward ratio is better than 1:1. So that's why I'm trying to exit my position at 38.2 only. I'm not waiting for this 50% level. I'm trying to exit as soon as possible ahead of non-farm payroll, and we have a few days remaining in this year. So that's it about the trade. We have to exit the position before release of NFP.